Hello, everybody. Welcome to our walkthrough today of exercises 1017, 1018, and 1019. So we have Busytown Corporations, which manufactures shoes, hired a recent college graduate to work in its accounting department. On the first day of work, the accountant was assigned to total a batch of invoices with the use of an adding machine. Before long, the accountant, who had never been seen such a machine, managed to break it. Busytown gave the machine plus $340 cash to Dick Tracy Business Machine Company in exchange for a new machine. Assume the following information about the machines. So before we get through and start going through these different types of non-cash exchanges, what I do want you to do is that if you haven't looked at it already, take a look at, I have a separate video that just deals with non-cash exchanges. And the important thing to remember is that when we're dealing with any type of asset disposal, we have to take that old amount off of the books. So from a non-cash exchange standpoint, we always have to go through and take that old asset off of the books. And when it comes to recognition of gains and losses, you're always going to be recognizing the loss. Okay? And the reason is that if what we're giving up in terms of cash or that old equipment is less than the fair value of the new machine, then what we need to go then through and do is recognize that loss. So over here, though, we will be recognizing gains to some certain extents. So, and this will really be, does the transaction have commercial substance? If the transactions are without commercial substance and no cash is received, we defer the gain and we reduce the carrying value of the equipment received. And then if the transactions are with commercial substance, but some cash is received, then we're going to have a partial gain, which is going to be known as the boot. So right over here and just that boot calculation. So if look over here, what is commercial substance? If the transaction, we have to be told it has commercial substance. If more than 25% of the total assets are received in cash, then that transaction is deemed to have commercial substance. And then over here in loss situations, and if it does have, if it does have significance, and we're going to go through and do that. So right over here, this is where I wanted to kind of go through and look at the boot. So if we do have a gain, what we're going to go through and do is, and if some cash is being received, we take the gain, we multiply that by a ratio of the cash received or the boot divided by the boot plus the fair value of the other assets received. So that's what we'll go through and look at as we're approaching these non-monetary exchanges. So over here, we're being asked to do this from both sides. So the first side is basically from Busytown. And we know that for Busytown, what Busytown is going to have to do is they're going to have to take the old machine off of its books. So the machine cost, the old machine was $290. The accumulated depreciation on that old machine is $140. And at the same time, I'm looking at this over here. I gave them my old machine plus $340. So my cash over here is $340. And the value of the equipment being received as of right now, the value of the new machine or the fair value is going to be $425. So when I look at this over here, I have total debits of $565 because I got a new machine with a fair value of $425. I had to take the old machine off of my books. And then over here, I'm paying cash for that new machine. So when I look at when I go over here and I look at this now to balance, what I'm going to need is if I have a debit, I'm going to have a loss. I'm going to have a loss here between the difference of the 630 and the 565. So if I'm Busytown, this is what I'm going through and recording. Okay, so once I go through and I add this up, I know I'm good on that front. So this is what I would have. Okay, so that's what I would be doing if I was Busytown. Okay, now if I'm Dick Tracy, it's a little bit more interesting. So over here, I'm receiving cash of a total of 340. I'm also getting old equipment that has a fair value of 85. And I'm going to record a sale of 425. That's the amount of the sale that I'm going through and recording. It's inventory to Busytown. It's a sale over here to Dick Tracy. Okay. The same time as I'm selling equipment, I have to take the equipment off of my books. I'm going to debit cost of goods sold for 270, and then I'm going to go over here and then credit inventory for 270. So that's how, for Dick Tracy, that's how they're going to go through and record that particular transaction. Okay, so that is exercise 8-17. Let's now move on to exercise 10-18. So Cannondale purchased an electric wax melter on April 30th by trading in its old gas model and paying the balance in cash. The following data relate to the purchase. So the list price of the new melter is $15,800. The cash paid is 10 grand. The cost of the old melter had a 5-year life and a $700 salvage value was 11.2. The accumulated depreciation on the old melter straight line was 6,300. Secondhand fair value of the old melter was 5,200. Okay, let's make this real easy. First thing I need to do is that I need to go through and take the old machine off of my books. So for Cannondale, okay, I know that the equipment had a value of 11,200. However, I need to know what the accumulated depreciation was on that equipment. The problem is that when I look at this, it's being sold on April 30th, and the depreciation has been recorded through December 31st, 2019. So right over here, when I have accumulated depreciation, it has a balance of 6,300. So this is through 12/31/19. I need to figure out what is the balance of the accumulated depreciation as of April 30th, 2020. So what I need to do is I need to say, okay, if it's straight line, acquisition cost minus the salvage value divided by the estimated useful life. My acquisition cost was 11,200. My salvage value was, it told us it was 700. And my estimated useful life was 5 years. So I'm going to have 10,500 divided by 5. Or my annual depreciation is going to be 2,100. That's not the answer, though. Why is that not the answer? Because I'm only talking about 4 months of depreciation, or January 1st through April 30th. So what I now need to do is I need to multiply this 2,100 by 4/12, and I'm going to get $700. So the accumulated depreciation that is coming off of my books over here is going to be 7,000. Okay, so that's a good, this is kind of a fun question, like it for an exam. Okay, the other thing we know too that really has no other, that also the other thing we need to know here is that we have cash paid of 10,000. Okay. So prepare the journal entries necessary to record the exchange, assuming that it has commercial substance, or if it lacks commercial substance. So what I now need to do is to say if it does have commercial substance, so my list price of the new melter is going to be 15,800. I'm just going to pause really quickly just because I want to check that answer to make sure I'm doing this right. So just give me a moment. Okay, so I'm now going to go back and kind of refute something I did in an earlier video, but let's go through it. So the equipment, the new equipment, the way I'm going to be valuing this is I'm going to say the cash paid plus the secondhand, or plus the secondhand fair value of the old melter. The fair value of the old melter is 5,200. So over here, my fair value of the new equipment is going to be 15,200. And I know I said on an earlier example that the list price, because it was only $100 off, but if the amount was more significant, like I would say it is here, I now need to show the new equipment value at, and how do I want to define that? It's going to be the cash paid plus the fair value of the old melter. So this over here is going to be 15,200. When I go through and I add these up, I have a difference between 22,200 and 21,200. Or over here, I'm going to have a gain on disposal of 1,000. This is the only situation where I'm going to be doing this. It is because the transaction has commercial substance. So in going through and doing this, this is how I would go through and do it. Whenever I'm doing a gain or a loss, it's going to be on whatever I need to go through and do to balance my journal entry. That's why this journal entry is so critical for you to go through and to do. Now, for Cannondale, if the exchange lacks commercial substance, what's going to happen here is that notice here, I'm not receiving cash, right? Over here, rather what I'm doing is I'm not receiving cash, so I'm going to defer that gain. So how do I defer the gain? Well, I still have to take the old equipment off of my books, and I'm still paying an amount of cash. So the answer here is my new equipment is going to be recorded at whatever I need to do here to balance. So here to balance, I'm going to need 14,200. And that's how I'm going to go through and record this if it lacks commercial substance. So because that lacks commercial substance, that's how I'm going to go through and record it. Oh. Okay, so I'm wrong on this. What they're saying here is on this second part, this is not the correct answer. And going back over here to what I was explaining previously is that if more than 25% of the total assets are received in cash, it's deemed to have commercial substance. So I would say that that would be paid or received. So what we would still do, because over here, transaction has commercial substance. And what you would probably say here is the fair value of the old melter is at 5,200. The cash paid is 10,000. Since of the total transaction price, the right over here, this represents more than 25%. You would not do it like this. Instead, you would still have the gain. So this would still be 15.2, and you would still have the gain on the equipment disposal. Wow, that's a messed up question. Glad I have the answer key in front of me. But I do understand why. So if it lacks commercial substance, but then by definition, if it has commercial substance, then yeah, that's a nice one. They should not have said anything. But since the transaction has commercial substance because the amount of the cash paid relative to the total transaction is greater than 25%, you would still go through and recognize the gain. Wow, that's messed up. I don't think I would do that to you on a test. I think people would come over and start attacking me. Okay, so let's take a look at this next one, which is exercise. See which one, how can I mess this up further? I don't know. The day's young. So exercise 10-19, Arosa company exchanged equipment and used in its manufacturing operations plus 30,000 in cash for similar equipment used in the operations of Lobianco company. The following information pertains to the exchange. Okay, so Arosa. So let's do the easy part first. So accumulated depreciation on the equipment is 19,000 that they're giving up. The equipment costs them 28,000. And over here, they're giving up cash of 3,000. So when I look at this over here, what is the value of the new equipment going to be? Okay, so right over here, I have a difference. So the fair value of the equipment being received. So the equipment new from Lobianco. If the fair value of that equipment is 15,500, then over here, my total amount of what I'm receiving is greater than, this is 34.5 versus 31. So what I would traditionally want to say is that I have a gain, and the gain amount I'm going to have is going to be 3,500. However, since the transaction lacks commercial substance, and let's go through and make sure that we're doing this correct. So the cash being paid, and then the equipment is 15,500. So cash is 16% of the overall transaction. So therefore, we would say that the transaction lacks commercial substance. And therefore, what we would then do is we would defer the gain. So I'm going to go through here and say I'm going to compare 31 to 19 to get it to this to balance. It's going to be $12,000. So I defer the gain because the transaction has no commercial substance. Okay, so the cash paid is less than 25% of the total amount given up. So the transaction is non-monetary, so the gain is deferred. And I think that, yeah. So the 25% of the total amount given up. So let's keep going. If they're saying that the fair value of the equipment given up, if they're saying that that was 12,500, it's still below 25%. Okay. All right. Let's now go through and do this for Lobianco. Okay, so Lobianco company is receiving cash of 3,000. They are also taking equipment off of their books, 28,000. And they're also taking off equipment value at 10,000. So those are the items that we know for certain. And as we come over here, okay, so we got equipment off of the books, they're receiving money, we're taking that accumulated depreciation off of it. So the fair value of the equipment that they are receiving is going to be 12,500. Okay, so for Lobianco, they've got 25,500 in total debits as compared to 28,000 in total credits. To balance this, I'm going to have a loss of 2,500. And so that's how I'm going to go through and record that here. Okay, so that's how I do go through and do that one. Now, prepare the journal entries to record the exchange on the books of both companies. Assume that the exchange actually this has commercial substance. So for Lobianco, this over here is not going to change. So Lobianco, even though they're receiving cash, this still is not going to be changing. Still going to be, it's going to be the exact same journal entry. This is not going to be changing. Over here, though, if the exchange does have commercial substance, then for Arosa, the way that we're going to go through and then do this is that Arosa is now receiving equipment. And we're going to record this at 15,500 because that's the fair value of the equipment that Arosa is receiving. So in this one, in this case here, I'm going to have a gain on exchange. And this is going to be for 3,500. Okay. So that's how that particular question works. So again, when we're going through and doing this, and I want to kind of just go back and revisit this 1018 real quickly because I can. When we look at 1018, and this is what really messed me up, is as I'm looking at this here, if the exchange has, so if we're saying that the exchange has commercial substance, and then when we say that the exchange lacks commercial substance. So the way that they went through and did this, it's a fair value of what is given up. So As I look at exercise 1018, what is given up by the company? It's cash is given up, and then the fair value of the melter is 5,200. So since this here, the cash paid is 65% of what's given up, then the transaction, even though it says it lacks commercial substance, it has commercial substance. So in any event, I'm sure I'll be getting comments from many of you in class about how crappy this video was or how confusing it may have been, but that's what the class is for. So this is my self-exploration, and I want to thank you very much for joining me here today. And I look forward to seeing you on the next video. Have a great one.